Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny, and today we're going to talk about the Fed balance sheet is popping off again. Is it time to buy some calls because Jerome Powell's got the printing press running again? I don't know, maybe.
Two Super Guys Trade Stocks.
That makes me
That's
very
it.
sad.
Yeah, well, those of us that saw the utter absurdity of what happened the last time Jay Powell got the printing press goddamn going, we saw what happened to the market. The crappier the company, the more the stock price went up. That's the question here, okay? I don't think that's the case, but we'll get to that here in a minute. All right. So, this is kind of some of the other headlines going on as far as monetary policy on a global scale. The European Central Bank met this week, increased their basic rate 50 basis points or 0.5%. They're still well behind where the American counterparts are, though. All right. And they're in a very different place as far as so this is the American Fed funds rate, right?
Okay.
We're chilling at like 4.75 to 5, and they're just now popped up to 3.5%. So they
But
got a long ways to go to catch up.
it's important. This was in the midst of Credit Suisse having their own SIVB moment.
Yeah,
So
very
important.
true. Exactly, very true. That I was kind of surprised with that, but once you kind of look at where they are comparatively to the American counterparts, it makes more sense that they could be more aggressive because they're further behind the ball. But this is for the upcoming meeting this week, Fed March meeting. Huge meeting. I can only imagine the volatility we're going to see in the market this week because of this. Yeah, because you're seeing you have the banking crisis, you have the Fed balance sheet finally starting to expand again. You have basically just a conglomeration of things coming together, and this is the first time since December where we're going to get an update on Fed projections, where they're going to vote again on where they think the rates are going to be, where the terminal rate's going to be. So a lot of information is going to come out this week from the Fed meeting.
For those of the people that keep on asking if I'm short, I still am. I have multiple target dates from June 16th this year, January next year, June next year. Now, I will be canceling the June this year ones. I'll just take the loss depending on what happens this week. This week is huge. Like this week
Okay.
should determine, I would assume, what happens for the next
Yeah.
at least 3 or 4 months.
So this is the most recent expectation for the Fed meeting this week. You have 38% of people saying that they're not going to move rates at all, and 62% now believe that there'll be a 25 basis point hike. It's a pretty narrow range here, and it's not quite evenly split, but not a whole lot of people are believing they're going to be anywhere near as aggressive as the European Central Bank was.
What's the guy's name? Steve Eisman.
Yeah,
What's his
the
name?
big short guy.
Yeah. Um, I think he had a quote that came out this last week, and he's saying if the Fed is scared to raise rates because of regional banking crisis, then we should all be terrified. Like
Yeah.
it shouldn't. I mean, I understand it sounds counterintuitive. It really shouldn't have an effect. You shouldn't suffer the entire economy longer because one very irresponsible bank, one kind of not the most responsible, and then we have a couple of bank runs, but
Yeah. Completely agreed. And the other interesting thing that's kind of developed over this kind of recent time period since we've had these bank failures is, do you remember what the chart here? So this is the Fed funds rate probabilities for all the way out until July 2024. All right. Do you
okay.
remember what the shape of this chart kind of looked like maybe even a month ago?
Wait, I'm sorry. This is
So this is predicting what the market is pricing in for a Fed funds rate. Do you remember they were basically pricing in a big plateau
oh
for a period of
yeah,
time,
yeah,
take it up
for
to
a
a high
while.
level and stay there? Yeah, that's no longer priced in at all.
Okay,
Yeah. So if you follow this blue line basically here, that they're saying we're gonna peak in the next couple months by May, and then we're gonna start cutting by that point, and just consistently cutting all the way through July
that
2024.
that doesn't make any sense. So I mean, Jerome Powell has spoke on this so many times. I don't even know. I feel it's kind of pointless to quote him, but I mean, he's the guy in charge, and even he said we got to hit a certain level, and then we're gonna stay there for kind of a long time.
Yeah. Well, the market thinks he's a liar.
All right.
Yeah, pretty fascinating. So this is what we're looking at right here. We're looking at this is one of the Fed fund Fed board governors, talking about the actual rate being a 5.4% for terminal rate. So, he was still calling for, almost another percent above where we are currently as
I
far as
agree.
Fed funds rate. Yeah.
I 100% agree. I don't want to have lasting inflation because like 0.0001% of people made a huge mistake.
Yeah.
That's not everyone else's problem.
I agree. Everyone suffers the brunt of inflation, it definitely very true. So, reminder, the dates for the actual Fed funds
Yeah.
FOMC meeting, March 21st to 22nd this week. Going to
It's
be pretty
also will
wild.
be the dates that I may end up taking out a second mortgage. We'll see. Who
Yeah,
knows?
I mean, it's possible. So, in terms of where the U.S. is compared to the ECB and why the interest rates are so kind of different, I guess you could say. So, most recent CPI data from the U.S. had 6% headline for February 2023. Right. This is our chart where we've come down quite a bit from the peak here. Right. When you look at Europe, their most recent one was 8.5% overall. This one actually has a few different kind of categories here. Don't forget, this is the effect of that war in Ukraine. Absolute insanity in terms of
Yeah.
the energy prices
Jesus.
that they've seen. Yeah, I know, brutal, right? So they're fighting a very different battle there than we are currently in the United States, and they still have much higher inflation. Their rates are still not as high as they are in the U.S. So using their metric of 50 basis points here, it doesn't necessarily mean that we can expect anything different from our Federal Reserve.
Right. I think we've echoed Canada pretty close, right?
Yeah,
Yeah.
we have indeed. As Powell's talked about this, he said, we don't necessarily follow one another, but we are in constant communication about, kind of what our moves are going to be. Yeah. So this is a chart. I don't know if you guys have seen this. It's probably out there on many other YouTube channels this week because it's the first time we've seen a dramatic shift in this. So this is the Federal Reserve balance sheet, right? So all of a sudden we see this spike. Here on the end, but they had been trending down for quite a while. They were starting to do quantitative tightening, right? They were selling $75 billion worth of bonds basically a month, trying to decrease their balance sheet from back, towards pre-pandemic lows or wherever they want to get to a baseline. They never actually publicly stated anything like that, but
They
it
just
seems like it never goes back.
publicly stated a lot lower than where we were. It never goes
Yeah,
back to where we were, but
yeah.
way lower. So
Yeah, that never really gave a goal of where they were trying to get to, but then they lower. But all of a sudden, we have this massive spike here: $300 billion added into the Federal Reserve balance sheet in a week. How do you feel about that?
it's just I I don't like that we're bailing out. I got crap for saying the word bailout. I mean that's what it's not the same as 2008, but it still is in terms of lending financial support. It's not
Yeah,
direct tax dollars, but it also is indirectly it is, just not direct.
it's the same group of people that ultimately bear the cost of something,
Yeah.
right? Because although the taxpayers aren't on the hook for anything, the FDIC can levy a special charge on banks that are FDIC insured to pay for this, right? And where do the banks get their money from? I wonder. The freaking clowns at bank, right? Like the same people that have paid taxes. I don't know,
Yeah. Who
productive
knows?
citizens, if you will.
Crazy to use
They
the
don't.
term bailout.
Yeah, I know, right? It's ultimately the same. Yeah, it's a question of semantics. It's like my wife's giving me a loan.
Yeah,
It's the
there you
same
go.
household.
Same.
You know? But this right here is where the Fed balance sheet kind of expansion came from, loans. This is all money that they're loaning out to these large financial institutions. If you actually looking up top here, they were still declining in terms of their treasury notes, the MBSs, that sort of stuff. The actual quantitative tightening that they had been previously doing, they were continuing with. But they did put $300 billion worth of loans basically on their balance sheet in a matter of a very short time frame. Yeah.
Yeah, and there's a couple other banks. We have a really cool video coming out tomorrow, but a couple other banks that are also at risk of bank runs. This could get a lot worse.
I mean, it's interesting. So I can't see the bank run itself getting that much worse
I
because
agree.
of this, right? The Federal
Yeah,
Reserve is sitting there saying hey, we'll loan you guys par value on your bonds, right? I forget exactly what his name is. Oh, Patrick Boyle joked about par value being basically fictitious numbers. So I have this pen. It is worth $100 billion. Will you give me a loan for it from the Federal Reserve? And the Federal Reserve is like, yeah, sure, I'll give you $100 billion in that pen.
sweet. Perfect.
And don't forget, in the grand scheme of things, this is that massive spike we saw. It's a little blip in comparison to overall the entire Fed funds balance sheet. This was the pandemic right here. Yeah,
It's true, but look at the severity of the situations. Pandemic versus this. Ugh.
there's always another crisis. It is absolutely amazing that they will always find a reason to print money a little bit, if you will. I don't think you're going to see the massive appreciation you saw during this time period because they're not the same kind of items that they're doing. These are loans rather than them actually going out and buying open market securities that they were doing during this spike. So the whole buy call thing on the front page, I don't believe it, but you never know.
A lot of other
People
people
that
do.
believe it.
A lot
Yeah,
of other people are going calls.
I mean, I can't say I blame them because last time we saw like this massive spike here of the Fed balance sheet inflating, we then saw, Kathy Woods and, crypto and everything take off like to the moon, and GameStop and things like that because there was just so much money in the system. But I don't think this actually equates. That's my point. So I would say overall, a relatively minor blip, but keep an eye on the Fed balance sheet because if this trend continues, it's something to pay attention to, especially when you're talking about, if they start actually buying things rather than just giving out loans. That makes me much more afraid for more inflationary pressures and whether or not maybe we do actually have to buy some calls.
Yeah, I mean, for my bank account's sake, I really hope that doesn't happen. But you never know. Is what it is. Give us a like and subscribe, guys, if you don't mind. We really appreciate the comments as well. I read the comments and you get to learn a bunch of things. So thanks a lot, guys.
Catch you guys in the next one.